$109,000, one wild January rally. But can Bitcoin really do it again now? Co-founder of 21 Shares Ophelia Snyder is not convinced that Bitcoin will repeat its January 2025 surge. She argues that the main obstacle is simple. Investors just do not feel optimistic right now. A popular market sentiment gauge has stayed in the fear zone since October. That means traders remain cautious even after a historic run that pushed Bitcoin to a new all-time high, above $109,000 ahead of President Donald Trump's inauguration. Since then, volatility has flipped the tone. Analyst Axel Adler Jr. notes that trading activity is now near the lows of this cycle. Average weekly volumes on spot and futures markets have fallen by about 204,000 Bitcoin to around 320,000 Bitcoin. For a market that just set records, that is a sharp cooldown. Institutional flows tell the same story. In November, spot Bitcoin exchange-traded funds saw outflows of roughly $3.4 billion. It was the second worst month for those products since launch. Early December has not looked much better, with an additional $142 million leaving the sector. Snyder says these flows reflect a broad shift away from risk rather than a specific rejection of Bitcoin. She does not expect all of the forces behind today's volatility to resolve quickly. Without a clear change in sentiment, she views a repeat of the January rally as unlikely in the short term. At the same time, she points out that January often surprises. Institutional investors tend to rebalance and reset portfolios at the start of the year. If that process includes even a small tilt back toward Bitcoin, the impact on price could still be meaningful. This debate comes after a year of dramatic moves. Bitcoin first exploded to that $109,000 high in January, riding optimism that the new administration in Washington would turn the United States into a crypto capital. Supportive rhetoric from the White House fueled hopes of friendlier regulation and faster approvals for new financial products. Over the following months, digital gold set several fresh records. The latest peak came in October when the price climbed above $126,000. Then, the trend reversed. By November, Bitcoin had slid toward $80,000 in a long correction. Forecasts are shifting as a result. Analysts at Galaxy Digital recently cut their end of 2025 Bitcoin price target to $120,000, down from a previous goal of $185,000. Many traders now see the path to higher highs as slower and more uneven than they hoped earlier in the year. Still, Snyder stays bullish over the long term. She views the latest pullback as part of a broader bout of risk aversion across global markets, rather than a sign that the Bitcoin story is broken. In her view, the key catalysts for the next sustained rally remain in place. Those drivers include the launch of new crypto exchange-traded funds, greater adoption of digital assets by governments, and rising demand for alternative stores of value beyond gold. If those trends continue, Bitcoin could still climb well above current levels, even without a copy-and-paste repeat of the January move. On shorter time frames, traders are watching key price levels. Analyst Darkfost says Bitcoin needs to regain roughly $96,956 to restore confidence among a younger group of long-term holders. That line matches what on-chain data calls the realized price for that cohort. If Bitcoin can close above that region, Darkfost expects many of those investors to feel comfortable holding rather than selling, which could stabilize the market. For now, he argues, caution is still warranted while the price stays below $97,000. Other voices see room for another dip before the next leg higher. Trader Michael van de Poppe warns that a loss of support around $92,000 could open the door to a pullback toward $85,000. Even so, he believes the correction is close to finished and that Bitcoin is building a base for eventual new all-time highs. On-chain analytics firm CryptoQuant also highlights risk. Chief Executive Kai-Young Ju has warned about the potential for a longer-lasting decline, with many indicators still pointing to a bearish scenario. Yet, derivatives traders currently price the odds of a full-blown crypto winter at only about 7%. For investors, the signal is mixed but not hopeless. Short-term sentiment and flows are weak, yet long-term drivers remain intact. January could still surprise if fear fades and institutions return to Bitcoin for traders watching the next Bitcoin move closely. This has been BlockBrief. Stay informed, stay ahead.